Hey there, folks. Going to get back to the regularly scheduled program here, starting off with the market internal review for November 27th, 2023. For my folks out in the US, I hope you had a fantastic holiday. All right, we're going to jump right in here to the SPY 2-minute chart. So, looking at what happened with our short Friday, we had a really tight range. And that's to be expected. I actually omitted it from the last video, but Thanksgiving week has always been one, in my experience, that not a whole lot of opportunity exists if you're a directional trader, if you're trading shares, or if you're a buyer of options, 0 days or otherwise. That day's typically proven to not really be a great day for that, and I think we can kind of see that. We basically oscillated right within that, actually 50% of that first standard deviation zone from Thursday. So we had that huge range, from Wednesday, then Thanksgiving, and then Friday. We oscillated. This is, just the most minuscule 50-cent range essentially for the entire day. So great for theta sellers. So if you're selling SPX credit spreads or verticals or condors or something. But looking at today's action, so coming off of a short week, a short Friday, for what I do typically using the previous day's previous session first standard deviation TWAP range, we had a really tight one. Not much opportunity for me there using that tool. And coming into the day, seeing us with somewhat of a bearish price and volume on the New York Stock Exchange, and just seeing the extreme bear tick. I don't have mercy on the chart, and there's a reason for that, but it was showing oversold. We had this heavy tick, a gap down kind of across the market, and then we just had, one-sided tick. We did show some bull tick, and this run here wasn't, terrible. It's about a dollar move, wicked the previous TWAP price, and then headed down and essentially chopped for the rest of the day. Daily gap midpoint was a decent short scalp entry, but it was tough because there were many times where the price of the market, the advancement of the market started to rise, and then it would decline again, then it would rise again. And we have essentially an entire day of almost no tick. No energy, no momentum in the market whatsoever. So volume also was flipping its trends around throughout the entire day. Trend disappeared for the midday session until towards the end. I don't know if this was news or not. This one here was a pretty aggressive drop back down to essentially low a day. It did reverse right off of the lower TWAP band, so I thought that was pretty interesting. And we've got, effectively a flat TWAP most of the morning session into lunch slump, and then we kind of had a rising TWAP with the bands mechanically expanding. Very interesting how this shows the fact that we're going from long periods of no tick to all of a sudden a burst of tick. And that's just really the kind of day I'm not interested in trading, because when that tick kicks in and you've already had all this oscillation of trend for price advancement or decline and volume, you could get caught off sides rather easily, and that's pretty much what was probably happening to a handful of folks. So previous high a day was a really great short. That's hindsight, though. There's a lot of hindsight here, so those are days that typically are the most frustrating. Looking at the rest of the indices, so New York Composite basically oscillated around previous day low, so that showing to have a big gap down here. We didn't even come into the gap. We rejected the gap low, which would have been roughly right about here the entire day. That's showing a little bit more bearish sentiment to me. And looking at the volume, you can see at the close we did have an extreme bear break. even below kind of that typical level I would expect us to kind of sit in if it wasn't anything of any real strength. I mean, this is the strong bull and strong bear zone, but when we start to break that, I see that as some a much larger batch of liquidity going into the market somewhere. So that's interesting to me. So I'm going to be potentially looking at a little bit more of a bearish sentiment. And part of that reason as well is due to the monthly TWAP. We've been channeling in the second deviation on the month for the New York Composite as we finish up November here. And we've had a tremendous rise looking at SPY over the past how many days now. It's been pretty much up, 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 and up. And yeah, so in 23 days, we've gone up $43 in SPY. We've left quite a lot of gaps and quite a lot of areas, to be tested. In my opinion, it's not an exact science. They could just continue buying here, but I'm still sticking to that. Looking at the Qs has failed to make any kind of attempt to reach that 393 high that we've had on the month. And this whole area here, you can see, was kind of a temporary high just last week around 391. We've hit that a couple times now and rejected it rather strong. Here we did. So I'm still thinking that perhaps we'll come back somewhere. I doubt we'll get to monthly TWAP. That's all the way down to 376 by the end of the month. I just think that's unreasonable. But I could see us heading 386 and maybe visiting the high of July's first standard deviation, be 382. But that's a fair drop, although they could gap this down rather fast. That's only $7, so actually I think that's completely reasonable for the Qs to do something like that. The Dow, I haven't been watching Dow. Yeah, that looks like an absolute train wreck. That looks similar to SPY. Same kind of setup though, right? As we made a high. They actually did test it today. And they are above they had an inside day, so maybe they're a little stronger, I guess. I know for a fact that the Russell is channeling now for the better part of last week and so far today, this week, because I've got an iron condor on them that's been doing rather well in short time. So very tight channel here and real close, hugging that high end of that monthly TWAP. So that's going to be something to watch. I think we have this huge gap here between 175 and we'll call it 170, so a $5 range. That's big for Russell, for IWM. Looking to see if we come back down into that. So this was a previous high of November. You can feel free to ignore that now. That's obviously not accurate. The November high is somewhere around 181. We've come nowhere close to that. So we don't have much time left in this month, so we could just fizzle out until next month, December, and maybe we'll have the Santa rally. Difficult to say. We'll look at the growth stocks here above 20-day average. So again, we did ramp up over that high I pointed out from June timeframe that we kind of hit in July, towards the end of July. So we have really pushed into that and we're sticking there, but we haven't gone any higher. So we could still look at that as a potential reason for maybe at least a little bit of a pullback, at least the 10 SMA, that'd be 451 on SPY. And we are seemingly struggling around this gap here from the daily time frame on SPY. So that range, if you can't see it, I'll zoom in here. That's 455 to 453. So it's not a very big range, but I definitely could see us heading back down into that 450 sub for somewhere between 445, 450 area. But we'll just have to wait and see. So a couple tools that I've been looking at potentially to aid the videos that I create, make them a little shorter. One of those is this chart here. It's actually a sub-study. It's not an additional chart, so you wouldn't need an additional layout. for this, but you basically can select the internals that you want to see, and you can also add in the percentage markers. So a big thing about getting all of the internals to fit on one display as candles like this is that I needed to convert them to a scale of plus minus 100%. And I have to make some assumptions when I do that. I have to make the assumption of how many stocks in the New York Stock Exchange there are and kind of what the ceiling is for volume. So it is potentially a scenario could occur where you would see like 110% or even higher than that. But the whole reason I'm bringing this up is because I'm probably going to show this in the videos that I make for this channel, so I don't have to flip through all the various charts all the time, and just make these a little bit more concise for the viewers. That being said, I'm also going to be adding some options to MIT to instead of showing some of these rather large numbers or some of these numbers that maybe folks don't really understand because they haven't watched the original video on this channel, or it's too much to remember, or you don't care. I'm going to make this more configurable. You can turn off the ones you don't want to see. You can set them to percentages or ratios because that's what they are. And then I'll be using some of the logic from this here to create that effect up here. So just using this new tool here, this one is our add bars. The golden one is the Vold, and the more opaque one in the back or transparent one in the back is the tick. So I don't have trend turned on just because I honestly feel like I get enough from the dots on MIT, but also if I'm reading the ad and Vold myself, I don't necessarily need to see trend. I've been reading these long enough that it doesn't really provide a whole lot of value for me. I just glance at it really fast throughout the day. But again, so from MIT standpoint, we know we had a couple of breaks on plus minus 500 today, and that'll be an adjustment for me, is just understanding what that would mean from a percentage standpoint, and that ends up being about 20% break on this sub-study down here. So in the event that you want to use this, and I'll be publishing it, you'll know 20% is effectively that plus minus 500 on tick raw data. For the ad, so we're looking at, something that's a little bit easier here to figure out is I'm estimating about 2,000 stocks for the New York Stock Exchange. And so a 50% on this measurement here would be 1,000 stocks. So 70% is going to be pretty significant around that 1,500 area. And 100% obviously would be 2,000 stocks. So when we see, if we turn on the 70 and the 100, so we didn't have 70 today. We had we had some really close hits here, and that's where tick is showing that huge gap down. You can even see from here where we finished up 60-some% on that short day we had after Thanksgiving, and then the gap down across the entire market where we were up 60-some% and down 50% and went down even lower, almost negative 60%. So that would be 60% of the markets in decline. One thing that is interesting to note is the volume today was in a continuous downward trend. Meanwhile, price was in a mostly bearish, neutral, but slight uptrend most of the day until kind of the end of the day. But it's even kind of neat. You can see where they cross here around 1 o'clock. And that's even where, I believe that's not too far from where the high of day was hit on SPY. And then we had that big pullback. So very interesting to kind of see that. And like I said, I will be publishing this, but I hope it will provide a little bit more conciseness to these videos and just kind of bring a little freshness to the to the format. I'm sure it's getting a little long in the tooth. So looking at tomorrow, like I said, I'm going to be watching for a little bit more bearishness. I don't know what the futures market's doing right now. We had trend imbalance today, but didn't really see that follow through, and I think that's just mainly because of the the price volume divergence here and essentially no tick. So that could be a signal of, capitulation here until the next month. That could be really struggling to break out into, in any new highs on SPY. I know that there was a slew of tech companies that just hit all-time high, new 52-week highs. So that's massive, right? It was Microsoft, Amazon. I think Google was on that list. So that is significant. When you have so many of those, I know that there are those in the market that use those 52-week highs and lows signals for shorting or longing. So I'll be looking out for that. I'm watching the options chains, looking at open interest, you name it. Just trying to figure out exactly which way the break's going to go before it happens. I mean, that's pretty much what everybody's probably trying to do. So I'm no different there. And then one other study that I was doing with a Discord that's into SPX 0-day credit selling is taking a look at the top holdings of SPX. So this would be like your Apple, your Microsoft, Nvidia, Tesla, Apple, if I didn't say it. Google's in there twice because they have Class A and Class C, I think, and then UNH, United Healthcare. So if you understand from my past videos, the ADD, New York Stock Exchange ticker symbol ADD's symbol is a formula that looks at stocks breaking out from prior day's high. That's an advancement, or prior day low, that's a decline, and just the count of how many stocks in the New York market are doing that. So I followed the exact same formula. I didn't do bars because I'm not looking at open, high, low, close. There's only 10 stocks. But this would measure how many of the top holdings are breaking over their previous high or low if it's a decline. And so that's another study that I'll probably go ahead and release as well. And it has been interesting. I built the same one for the NASDAQ, NDX, and for some reason, I have to go look at it, but for some reason it's not showing the right number next to the symbol here. This should be a -2, but you will have the option, and I'll probably adjust their style, but you will have the option to show both at the same time. Oh, that's funny. NASDAQ is now -2. The thing about it is, though, is NASDAQ and the SPX, the S&P, they basically have really close to the exact same top 10. So honestly, I'm not even sure it's worth it. I think there's a difference of 2 stocks. I'm not kidding. So anyways, I hope that you found this information useful, and I hope you find this format useful. Please feel free to leave comments for suggestions, even if it's new indicators or a new idea you've got. Feel free. Reach out if you know me on Discord, Twitter, or X, whatever the heck it's called. And as always, thank you for watching. Happy trading.